時間亦都夠開。
It's the appointed time and we have a quorum. Let's get started. Welcome to today's meeting of the panel on financial affairs. Agenda item 1, information papers issued since the last meeting. No information papers issued since the last meeting. Agenda item 2, items for discussion at the next meeting. The next regular meeting will be scheduled on the 1st of September 2025. The administration is still deciding on the discussion items for the next meeting. The Secretariat will follow up with the administration on this and notify members. Agenda item 3, enhancing regulation of licensed moneylenders. Let me first welcome the government representatives to join us. Attending this item, we have Mr. Christopher Ho, Secretary for Financial Services and the Treasury, and his colleagues. We also have Ms. Kinney Wong, Registrar of Companies. I welcome the Secretary as well as the Registrar for attending this item. Let me first invite Mr. Christopher Ho to walk us through the paper. Over to you, Secretary. Good morning, Chairman and members. Today I'm here to brief members on enhancing the regulation of licensed moneylenders. We're briefing members on the proposal on how to address the issue of excessive borrowing. We are conducting a 2-month consultation on the proposal. We welcome any comments from members. All along, we've been monitoring the market situation in the money lending sector to continuously review and enhance the prevailing regulatory measures to ensure moneylenders will grant loans in a more responsible manner and to safeguard the public interest. Currently, the relevant transactions are governed by the Moneylenders Ordinance. Moneylenders will have to obtain a license issued by the court. Anyone who operates without a license, they will be liable to a fine of $100,000 or imprisonment of 2 years. To address the problem of excessive borrowing, we are proposing 6 important measures. I'm going to report to members on this now. First, enhancing regulation of unsecured personal loans. We suggest that based on the borrower's monthly income, we should set an aggregate cap on unsecured personal loans. If a borrower monthly income is less than $5,000, the aggregate loan should not be exceeding their 1 month's income. If the borrower's monthly income is between $5,001 to $10,000, the aggregate personal loan cap should be not exceed 2 months' income. Second proposal. We may formulate a debt servicing ratio cap. If the borrower's monthly income is less than $5,000, the debt servicing ratio cap should not exceed 35%. If the borrower's monthly income is between $5,001 to $10,000, the debt servicing ratio cap should not exceed 40%. We also propose to strengthen the protection of public interest. Currently, borrowers have to provide information of a loan referee. The loan referee has to provide information. Under no circumstances is a referee liable for repayment of a loan. For some employers, they are harassed because their domestic helpers borrowed money. We have the following proposals. After receiving the loan referee's written consent, the moneylender must send a letter to the referee to verify the authenticity of the written consent. Second, the loan referee must sign the written consent concerned in person. Also, we prohibit borrowers from providing loan referees when applying for unsecured personal loans. Also, we want to enhance the borrower affordability assessment. To ensure the integrity of personal credit information, we have been encouraging the sector to join the Credit Data Smart. We already have 36 money lenders joining the platform, accounting for over 60% of the sector. We will ask all money lenders to regularly provide their borrowers' crediting information to the CDS. Also, we ask money lenders with a certain amount of loans entered into. For example, if their loans entered into over $100 million, they'll have to report to the CDS. Also, we propose to enhance the complaint handling process. The company's register has been monitoring the supervision of the money lending sector and the compliance of money lenders with the licensing conditions. To safeguard public interest, the registry will enhance the transparency of the procedures for handling complaints against money lenders. We will study enhancing the mechanism. Also, we will step up publicity and education. We will step up publicity and education targeting the foreign domestic helpers community, young people, and low-income earners to enhance their understanding of money borrowing. We'll also promote the importance of prudent borrowing. We'll tell foreign domestic helpers to not provide employers' information or provide residential address of their employers or provide the employer's information as loan referees' information. We also propose enhancing the money lender regulatory regime. We propose to disclose the information of licensed money lenders if they have repeated offenses. We are conducting a consultation between the 23rd of June and the 22nd of August. After the consultation, we will collate and summarize the views received to finalize relevant measures and formulate legislative proposals. We're happy to take questions from members. Thank you, Secretary, for the briefing. I'm now opening the floor for members' questions. 4 minutes for each member. I'll read out the names of the members: Mr. Bill Tang, Dr. Tan Yue-heng, Ms. Carmen Khan, Mr. Ronick Chen, Dr. Wendy Hong, Mr. Adrian Ho, Dr. Starry Lee, and Dr. So Chen Wing. Mr. Bill Tang, please. Thank you, Chairman. I thank the Secretary as well as the FSTB for proposing some targeted measures to address excessive borrowing of foreign domestic helpers. Over the past 2 years, how many FDHs were involved in complaints, and were there very serious harassment issues? Did any employers settle the loan for FDHs? Now, going back to the proposals, financial companies, they aren't stupid. They know how much FDHs earn per month. They're still willing to lend the money to FDHs. This is because unscrupulous financial companies, they know that FDHs need money and they may force their employers to settle the loans. If financial companies are aware that FDHs cannot repay the loan, but still they borrow money to them and harass their employers, what kind of consequences will moneylenders face? Also, without the agreement of employers, foreign domestic helpers provide the names of their employers so that they become their loan referees. Well, will there be penalties? I have some suggestions myself on how to amend the moneylenders ordinance. During the consultation, well, I will hold a press conference. There are many issues concerning financial intermediaries. I think there are very weak protections in place to protect credit card holders. Secretary, I'll ask the registrar to provide some statistics first. Registrar, the company's registry in 2024 received 214 complaints in total. We have been carrying out inspections. We also issued warning letters as well as rectification orders. In 2024, we conducted 561 inspections. We issued 294 rectification orders as well as 22 warning letters. We also held a thematic survey to learn about complaints received involving foreign domestic helpers. Over the past year, based on information provided by moneylenders, there were 58 complaints, of which 18 complaints concern moneylenders harassing loan referees. So there is such a situation. We impose licensing conditions, and according to our guidelines, moneylenders must not harass loan referees. We also made it clear that loan referees are not liable to loan repayment. So anyone who breaches the law, it will be an offense. Secretary, we are conducting a consultation. If there are other views, we welcome any comments or suggestions. Secondly, we are proposing these measures in a targeted manner. We've been monitoring the market situation in the past few years. If you still remember, a few years ago, we introduced some new licensing conditions. They include requiring moneylenders to look at the borrower's repayment ability before they borrow money, before they lend money. Also, we tightened the statutory interest rate cap. We are looking at the market situation, and we have proposed some more targeted measures. Mr. Bill Tang asked how we will deal with situations if problems arise. As the company registry said, there is a mechanism in place. Also, anyone who breaches the law will be liable to imprisonment and a fine. I believe we all care about situations faced by loan referees. Therefore, one of the proposals we made is to not ask borrowers to provide information of loan referees. This is because loan referees are not liable to repaying a loan. We notice that there is such a problem in the market. Therefore, we're conducting this consultation to learn about people's views. This will help us better think about how we should move on to the next step.
Dr. Tan Yueheng. Thank you, Chairman. I support the government's proposal to enhance regulation of moneylenders. Now, some questions for me. Now, for unsecured personal loans of a small amount, that kind of loan should fall within the scope of financial inclusion. We have fintech, green tech, digital technology. All of them are doing well. About financial inclusion, though, development has been limited. Now, for small loans, these loans should be part of financial inclusion to meet the needs of grassrooters. Now, our statutory interest rate cap has been adjusted. It still stands at 48%. In some cases, the loans are offered at over 48% because there are processing fees, administrative fees. Those fees are used as a pretext to charge higher interests. and that's a heavy burden for the borrowers of such unsecured personal loans. What we discussed today will have wider implications, so my question is, in the future development of financial inclusion, do we have any directions for small loans? Can we develop small loans turn into something that's truly a part of financial inclusion instead of simply something for loan sharks? Now, my second question has to do with credit data smart. It's very important because the CDS plays a key part in guarding against risks for small loans, but only big players take part in the CDS. The smaller players are not on board yet. We should find a way to get all lenders to sign up, especially for the smaller lenders. Can we take some measures? Can we lower the fees for them? Can we do concessionary fees to encourage them to sign up for the CDS? Now, my third question, coming back to small loans, can we take a similar approach to taking out insurance? Can we set a cooling off period? You take out a loan and then you can only repay based on your monthly income. You can do that. But then sometimes loans are taken out on an impulse. That decision was not a well thought out process. Say, can we do a statutory cooling off period of 48 to 72 hours after signing the loan agreement? The borrower only loses a deposit. Wouldn't that be a more prudent approach? So 3 questions for the Secretary. I thank Dr. Tan for his questions. Dr. Tan, as I can gather, supports our measures to deal with over-borrowing. Dr. Tan brought up the point about financial inclusion. Our focus is to promote responsible borrowing. We required lenders to assess the means of the borrower before lending, and then we introduce the cap on interest rates. The point is to adopt a range of measures, including education, to promote responsible borrowing. Now, the measures we propose this time are very targeted. We have looked at experience. Referees have been harassed. Without a cap, without something quantifiable, we may not be able to get a grip on over-borrowing. That's why we propose measures based on someone's income. So for someone making less than $10,000, there are different ways to deal with the situation, ways to manage the amount this person can borrow. Dr. Tan also brought up the point about credit data smart. The point of the CDS is to address the asymmetry in information. The lender knows very little about the borrower. That's why we want all lenders to put information on the CDS. But then on access to information on the CDS, that may mean operating costs for the lenders, so they may have to consider that. So from a business point of view, getting every lender to sign up for the CDS, getting everyone to submit reports on the CDS may pose a challenge. That's why we draw a line at $100 million. If they operate on a scale above $100 million, they have to submit reports on the CDS. Our overall direction is to use the CDS as an effective tool to address this information asymmetry. And we also try to work on things like ease of access to the reports and how easy it will be for lenders to submit the reports on the CDS. We will also look at the uptake after the new arrangement comes out. We will welcome views on this. We want to strike a balance. We want the lenders to do what we want them to do. Next. Ms. Carmen Khan. Sorry, we're out of time, so we'll have to move on to the next member. Ms. Carmen Khan. Every year we talk about moneylenders, and this is top of mind for me. The Secretary will be aware of this. I welcome tougher regulation of licensed moneylenders. Now, we have seen some figures from the past, so I wonder if the government can give us the figures now, if not after the meeting. Now, we talked about overborrowing by foreign domestic helpers and also figures about homemakers and students, young people. Now we are going through a public consultation. We would like figures. That way we can have a discussion based on data. Now, stronger regulation of moneylenders, say a cap on borrowing based on monthly income and also a debt servicing ratio as a cap on borrowing. I welcome all those measures, but I don't see anything on the consequences of breaching those rules. So in the upcoming legislative exercise or the consultation, I would like to hear more details on the penalties. Now, on the Credit Data Smart platform, this has to do with the information asymmetry. There's a pressing need to address this problem. I agree with Dr. Tan on what he just said. We now have 36 on the platform, but we don't have the denominator. How many moneylenders are there? Now, we see the percentage, 64% of all loan amounts. But we don't get the total number of moneylenders. We don't know how many moneylenders are off the platform. The problem lies with the players who are not on the CDS. We need financial regulation that applies to all stakeholders, not just to the law-abiding players. And this is where we fall short. The proposal now is for those lending $100 million, and that will make up 85% in the future. We're simply going up from 64 to 85%. We haven't covered everyone. We won't be covering everyone. Now, the annex also covers Singapore's approach. They make a distinction between Singaporeans and non-local residents. Different requirements apply. For all loans, lenders in Singapore are subject to the same rules. They have to consult the Singaporean equivalent of their CDS. Now we have a decentralized landscape of moneylenders in Hong Kong. That's undesirable. Now the company's registry will address the problem in a centralized approach. I would like to hear more details on this point, Secretary. First, some macro figures. Now in terms of the unsecured personal loans market, it's a highly concentrated market. As at the end of 2024, the total amount of such loans amounting to more than $10 million. They were covered by 300 lenders. In terms of the loan amount, among the top 10 players, those top 10 players made up 64% of all unsecured personal loans. So it appears the landscape is full of players. But the sizable players are really the usual few dominant players. Ms. Khan also made the point that not everyone is on the CDS. We have 85% of the players. What about the remaining 15%? We take a multi-pronged approach to regulation. Some moneylenders in this business are already on the CDS. Lenders not on the CDS may not be the top players. The bigger players tend to be already on the CDS. So we shouldn't just assume everybody turns to the players not on the CDS. Of course, we should work to minimize the information asymmetry. Access to information on borrowers and access to full information are also factors on which we would like to hear from members. That's why we are consulting the public for 2 months. And then afterwards, we will be working with the industry. We will work with the CDS and moneylenders on how to implement the proposal. But I get member suggestions. First, tougher penalties. And also addressing the information asymmetry. We will be taking away these points and consider them. Chairman, the information asymmetry affects not only the lenders, but this risk will spread to banks. because banks may not have an idea of how much the borrowers are already in debt based on loans from the moneylenders. So the risks may spill over to banks. Mr. Ronick Chen. Thank you, Chairman. Now, the world adopts different approaches to regulation of unsecured loans, and I welcome this public consultation in Hong Kong. I see this cap on loans. I find that intuitive. And then you also have an alternative, and that is the means of the borrower, how much this borrower can repay. But that has to do with how long you are supposed to repay a loan. The lender can give you a repayment period over 5 or 10 years instead of 1 year, but then the borrower or lender can simply insert a clause requiring repayment on demand, and that will change the picture right away. So I hope the government can consider this possible loophole. Now, on the credit data smart, Dr. Tan Yueheng and Ms. Carmen Khan brought up this point. I held meetings with the monetary authority. I talked to them, and I've heard there are struggles because of the fees. Now, the paper mentions a common module for money lenders, but that module is not enough to encourage every lender to sign up. Now, there will be a requirement for all lenders to upload their data. But how often do they have to upload? We should require monthly updates. And lenders will be aggrieved if they are only required to upload data without being able to access them. So in the long run, lenders should be able to access the data after uploading them. So that's something for the government to consider. Now, on complaints handling. So we are going on the number of complaints received, but that's misleading. Someone can file complaints repeatedly, and that skews the figure. Instead, you should look at the number of complaints resolved to the satisfaction of the complainants. From my other positions, I realize the number of cases resolved with satisfaction to stakeholders matters more than the number of complaints you receive. So I hope the government can approach this figure with care. Secretary, the member made a few good points, and we will take away those points. Our proposals this time covers the entire process. It's across the piece. It's not just about granting the loan or just assessing the borrower's means or setting certain ratios. And our proposal also covers what happens when something goes wrong, how we deal with complaints. We will take away the member suggestions. And we will also consider the views we gather in the 2-month exercise. Any follow-up? No. Dr. Wendy Hong. Thank you, Chairman. I support strengthening regulation of licensed moneylenders. We need restrictions on unsecured personal loans to guard against over-borrowing. Other members have said that not every lender is on the CDS, and that point has been addressed by the Secretary. Now, between the first and second update of data by a lender on the CDS, there's a gap. So will the loan amount of a borrower go above the limit in the time in between? Now, there's a debt service ratio proposed of 35% to 40%. I don't see the same cap in other jurisdictions. What's the thinking behind our thinking? Will we end up driving small lenders out of business? How do we achieve a balance? Now, for the referees, can we simply prohibit the use of referees? Often, a foreign domestic helper takes out a loan, and then the finance company goes after the employers, and that leaves employers in distress. The referee is optional in the loan granting process. Can we simply prohibit the use of referees in law? Secretary, the member made some good points. Indeed, we are considering the option of doing away with referees. There is no statutory duty on the referee to repay the loans. And then we have seen referees who have been harassed. So one option on the table is to do away with the referee. We prohibit the use of a referee. That's part of the consultation exercise today. Now, on the Credit Data Smart platform, on the timeliness of data on the CDS, that's an issue we are aware of. So we will require everyone to submit data onto the platform. But the interval is a question we have to discuss with the trade. As Dr. Hong mentioned in her second question, which was a good point, and that is when we set different limits, whether we have assessed acceptability to the lenders and the borrowers. You need demand and supply for any market. Something that works for the borrowers should also work for the lenders. The member asked about our DSR ratio or debt servicing ratio. So why set a figure for those making less than $5,000 or below, and why set another? We have considered the levels in different places, including Singapore. Singapore has a more rigorous approach. Our other proposal is to cap the loan on 1 month's salary. Now, for Singapore, the maximum loan is only 0.6 times of someone's monthly salary. Our cap based on someone's monthly income is even more stringent than the DSR proposal because you can manipulate the term to make sure a loan meets the requirement above the DSR. We are welcome to views. We have to be mindful of the demand and supply. We want to manage and regulate the demand, but we also want to make sure there's a market.
Yeah.
Next, Mr. Adrian Ho. The government is proposing an aggregate unsecured personal loan cap, and these measures target low-income earners. For those earning more, well, they may be considered as low-income earners as well, but there are no regulatory measures targeting them. Recently, I got a case concerning my friend, and he became a loan referee of his friend, and that person, I mean the borrower, is a low-income earner. And he went to all financial companies, almost 60 moneylenders in Hong Kong, to borrow money from each of these lenders. And at the end, this borrower left Hong Kong, and my friend was harassed by the moneylenders. My question is, how come this person could borrow money from some 60 moneylenders, and all these moneylenders lent money to this person, and then this borrower ran away, and there was paint splashing from moneylenders, and my friend was left in huge distress? Have you talked to law enforcement agencies to regulate the acts of debt recovery? Also, the statutory interest rate has been lowered to 48%, but an annual interest rate of 48% is still on the very high side. Has the government made an assessment of this interest rate level? Is this a very high interest rate that may put the underprivileged into traps? Secretary, we did some market research and we communicated to the sector. We understand the situation. That's why we have put forward a number of proposals in a targeted manner. First, we are thinking of doing away with the role of loan referees. We may ask moneylenders to not ask borrowers to provide loan referees. This is because loan referees do not have a role to play in repaying loans. And this is a comment or feedback from the market. Secondly, Mr. Adrian Ho asked how come a borrower can go to so many money lenders and financial companies and borrow such a huge sum of money. This is because of information asymmetry, and that's how the CDS can come to play. To address information asymmetry, we think that the CDS can play an effective role. We ask all moneylenders to report information to the CDS. We are also considering the operating costs. We want 60 to 85% of moneylenders to be included in the CDS platform. Moving forward, we will talk to the sector on the arrangement concerning the CDS. We want feedback from them. We want to ensure that there is regulation of the borrowers, but at the same time, we do not want to stifle the market. This is because there are people who need such financial tools, so we have to strike a balance. But at the same time, there are problems to be addressed. That's why we're putting forward these 6 proposals. We want to continue to listen to people's views in these 2 months. Next, Dr. Sari Lee. Thank you, Chairman. I thank the Secretary for the proposals. The DAB has been calling for enhanced regulation of licensed moneylenders. We also put forward a number of proposals targeting the borrowing of foreign domestic helpers. Many of these proposals have been discussed at the community level. We in general support the proposal. I myself is an employer of a foreign domestic helper. I don't know how come even after the foreign domestic helpers have left the employers, there are still people recovering debt from their previous employers. With enhanced regulation of moneylenders, will there be a bigger role played by unlicensed moneylenders? Well, foreign domestic helpers, they earn very little per month. Still, they get to take out loans from moneylenders. With the strengthened regulation, will there be unlicensed intermediaries lending money to these foreign domestic helpers instead? I'm concerned whether there will be supporting measures in place to ensure that there will no longer be any excessive borrowing. Otherwise, the demand may shift to unlicensed moneylenders. Excessive borrowing can cause huge disturbance to employers of foreign domestic helpers. Will unlicensed moneylenders face any criminal consequences if they lend money to foreign domestic helpers? Will there be measures in place to ensure peace of mind of employers? Will there be strengthened regulation of unlicensed moneylenders in the market? Secretary. The member is concerned whether with enhanced regulation of licensed moneylenders, it may give rise to unlicensed lenders. Well, if you operate in business without a license, that would be against the law. This is clear. Now we want to ensure excessive borrowing could be regulated effectively. We have to do this through 2 levels. First, we have to regulate borrowers. For example, borrowers with a monthly income below $10,000, then we will adopt a risk-based approach. For those earning $5,001 to $10,000 per month, they could borrow a little bit more money compared to those who make $5,000 or less per month. So these are measures to regulate borrowers. For those earning $10,000 or above, well, the minimum wage per hour is now $42. And so the monthly wage of those earning a statutory minimum wage is about $9,800 per month. The full allowance rate for those under the Working Family Allowance Scheme is about $12,000. And we also drew reference from the minimum wage rate. So these proposals are to address excessive borrowing. And the next step is to regulate licensed lenders. For those who carry on a business as a moneylender without a license, they are in breach of the law. We have been working with the police as well as the other government departments to step up law enforcement against unlawful acts. I hope the Secretary can consider putting in place supporting measures because these are important. Dr. So Chun-Wing. Thank you, Chairman. I support these proposals put forward by the government to address excessive borrowing. According to the paper, you have taken a holistic approach. This is because you have taken into consideration publicity and education as well. I have a suggestion for the government. One major purpose of these proposals is to address excessive borrowing of foreign domestic helpers. And to tackle this, you are going to step up regulation of licensed moneylenders. Will you learn from Singapore? For non-Singaporeans, or in the context of Hong Kong, for non-Hong Kong residents. Will they be taken care of under the law? For example, we do not want foreign domestic helpers to come to Hong Kong to borrow money. But currently, there isn't a policy that tackles the issue of overborrowing of foreign domestic helpers. There is a small group of foreign domestic helpers who borrow money and run away. There are many such cases. So will there be policies to address this issue? Well, I wonder if still there is a need to set an aggregate cap based on borrower's monthly income. Well, a borrower may be granted a loan of $18,000 according to the paper. And with such a huge amount that could be taken out, I think this would give an incentive for foreign domestic helpers to borrow loans. Now, turning to the Creative Data Smart Platform. Will you ask moneylenders to upload information to the platform in a timely manner? If there is information asymmetry, problems concerning money borrowing will still exist.
I thank Dr. So for his questions. Now we're focusing on unsecured personal loans. Many foreign domestic helpers take out such loans, but other people other than helpers also take out such loans. So what we're addressing here is not just confined to helpers. We target other people taking out such loans as well. And we said the caps we have considered other figures such as the statutory minimum wage, the minimum wage for foreign domestic helpers, $4,990. That's why we have made a distinction between those making $5,000 or less and those making $5,001 to $10,000. Members may have thoughts on whether this is viable, or maybe we should look at a limit on the loan or a debt servicing ratio. We are open to views. Now, turning to another point from Dr. So, it's about the CDS, timeliness of data on the CDS. We note the members' view. We can work on the supply side. We can require lenders to upload data onto the CDS. But how often will the uploads have to be to make the data useful? Should we mandate its use by all players? We want to include that in our consultation. We want to deal with over borrowing. We also want financial inclusion. So that's the balancing act we are trying to achieve. We want to manage risks without ruining the market through overregulation. We don't want to deny access to loans for people in need. We do thank members for their views. Dr. Johnny Ng. Thank you, Chairman. The topic under discussion today is top of mind for many people. I have my experience of a foreign domestic helper taking out loans and causing me distress. Now, my questions are as follows. Now, I see a proposal is to put a cap on how much we can borrow. A key part of that is the CDS. People in the industry have told me that a handful of borrowers take out loans from multiple lenders. They take out one loan to pay off another, and that's why the debt snowballs. That kind of thing has happened again and again. The CDS can help address the problem. But are lenders required to use the data on the CDS? They have access to it, but they may not use it. Will lenders be required to use the CDS as a basis for the decision to grant loans? That's something for the government to consider. Now we're targeting those on a low income for this proposal. Apart from foreign domestic helpers, something else also top of mind for me is university students. I've come across cases in the community that many university students take out loans of $200,000. These students have been told that they can take out a loan of $200,000, put the money into a business, and then the students realize business is not easy. These times are tough for university students. And because the students cannot repay the loans, the parents are on the hook. So for people on low or no income, such as university students, they may be able to make a bit of money through tutorial sessions, but these people are still studying and they don't have a regular job. So can we also require lenders to consider the usage of the loans by borrowers? I've been told that banks take a strict approach to how you can use a sum of money. Banks require supporting documents whenever you want to transfer a sum of money. And we have seen multiple cases of university students taking out loans. So can we also cover this problem as a part of our consultation? Secretary. I want to address the second point first. Now, the member said some people coaxed university students into taking out loans. If that problem falls within the regulatory scope, we can look at whether those lenders are actually playing by the rules to see if any referral is needed. Because we're talking about the money lenders ordinance here. So we will be regulating the players within the context of the ordinance. Now, on the other point, on restricting the usage of the loans. Whether we can restrict the usage of a loan for certain purposes. That is not within the scope of the proposal here because the amounts involved are modest and we have different forms of control. So early on, we propose caps on loans based on someone's income. It can be an absolute value or a ratio of someone's income. And then in assessing whether to grant the loan, the lenders will have tools such as the CDS. If members have further views, we are open to such views and we welcome views from members. It's about taking out one loan to repay another. And that's something we hope we can address through the CDS. We will impose requirements on the provision and usage of information. So we will require all lenders to provide information, and then people can use the data based on their operation. So can we mandate the use of data on the CDS? The CDS is a great tool for lenders to assess whether the borrower can repay a prospective loan. So what we should offer is more tools, more means for lenders to assess the means of the borrowers. That way we can address and minimize the risks brought by asymmetry in information. Sorry, I mentioned the cases of university students. The information comes from people in the loan business, so I can provide you with further information. Mr. Michael Tin. This reform is important. Many employers of foreign domestic helpers would like to see this proposal implemented as soon as possible. Now, I want to raise two questions and some proposals from me. The paper proposes a number of ways to protect the referee of a loan. The lender can simply go to where the foreign domestic helper stays, and the harassment can happen. What can you do to guard against that? Harassment is against the law, but harassment happens every day. The harassment goes on all the same. Are the criminal penalties not tough enough? Harassment is an offense. Still, it happens every day. People wonder if there is lawlessness in Hong Kong, and harassment is hard to substantiate. Of course, it's a different story for licensed moneylenders. If you can substantiate harassment of the referee or the employer of a foreign domestic helper, then the government can revoke the license of a moneylender. So we should couple the penalties for harassment with the suspension of a license. That should be enough to show the lenders the consequences. Now, let's look at the proposals. You can limit someone how much people can borrow. They only borrow as much as they make. A borrower can go to multiple lenders on the same day, and there will be no way for the lenders to find out. And not every lender uses the CDS. So how can we implement these proposals in the paper? I'm at a loss myself. You have to ensure real-time data on the CDS the moment a loan is granted. That data need to be on the platform. You need real-time information on how much loan someone has taken out at any given time. Can you really achieve that? If you cannot achieve that, this regime will be meaningless. Now, the paper also says the repayment period cannot be longer than the remainder of the borrower's employment contract. Employers are worried that their helpers may take out a loan within the last 2 months of the contract, so they propose a prohibition on borrowing within the last 6 months of the helper's employment contract. And the government will also need to get different bureaus work together. Please allow time for the secretary to give a reply. So can we set up a blacklist? So for those domestic helpers with a history of taking out such loans, they should be barred from coming to work in Hong Kong. Secretary. The first part of Mr. Tin's questions have to do not just with moneylenders, but also debt collection agencies. Moneylenders have a duty under their licensing conditions to manage their debt collection agencies. When criminal offenses are involved, we refer the cases to law enforcement agencies. On the other question about how the CDS can address our problems, the problems may be tough, but we have to rise to the challenge. We have to find a way, or at least find a way to ease the problems confronting us. The member raised concerns about the timeliness of the data on the CDS, how we can address the problem of a borrower taking out loans from multiple lenders on the same day. That's something for we to consider. We have a 2-month public consultation going on. We have to manage the demand for loans, meaning the borrowers. We also give tools to moneylenders so that they have more tools to manage their risks. That's something we will further consider. Chairman, 2 more suggestions. Can you indulge me for a moment? 2 suggestions. Can we impose this 6-month ban? So no taking of loans in the last 6 months of the employment contract and a blacklist. So those are my suggestions. Can you follow up with the Secretary on another occasion? Well, we'll see if we have time for the second round of questions. Mr. Edmund Wong. I support this regulatory regime. So the proposals include a cap on loans, the DSR, and other measures. One major problem is that a domestic helper takes out loans from multiple lenders and then they flee. They go to Macau and then they go on to different countries. They take out loans again and again. Now, of course, the lenders are also irresponsible in such cases. The finance companies also grant loans irresponsibly. They give a loan to anyone who comes forward. So this is where the CDS can make a difference. So hopefully the CDS can give the lenders data and then we can improve the overall system. But not every lender will be required to use the CDS, and that may create a loophole. The Secretary told us the top 10 lenders make up 64% of the market. Still, you have 36% of the market left. Those smaller lenders may become a loophole in the future. So given that problem, how do we plug the loophole? I get it. You have to strike a balance between regulation and development, but we know there's a loophole and there will be a loophole. How can we plug that loophole? Many employers are left in distress because their foreign domestic helpers take out loans. The foreign domestic helpers had the address of the employers. Last week, I got a case from a resident. The foreign domestic helper took a picture of the child in the household and the door of the household to take out the loans. And the lender called up the employer about the outstanding loans. Well, that's a case of a responsible lender because the helper could have gone on to take out more loans. That employer sacked the helper right away. But many employers are confronted with these problems. Do we have a mechanism such that without affecting personal data privacy, we find a way to deal with foreign domestic helpers taking out loans in such ways? So 2 questions for the Secretary. I thank Mr. Wong for his questions. The problems mentioned by the member are top of mind for us as well. That's why some options we consider now include prohibiting the use of a referee, and that can address the harassment of referees. When a foreign domestic helper is involved and the need arises, people can talk to the immigration department, because the immigration department has a division that approves visas for such helpers. In extreme cases, our existing framework offers ways to deal with that through different agencies. The member also mentioned a loophole. We have to face up to the problem. We have to find practical ways to resolve the problems. So one way to do that is to expand the use of the CDS. We want to include lenders. But in terms of using the CDS, we have to talk to the market players. It takes effort to strengthen the CDS. There are technical challenges, and then there are costs. We want to lower the costs for lenders to use the CDS. But this is an area that requires further consultation with the market. We will work on that in the 2-month consultation. But we got something positive at the meeting today. We noted members' concerns, and we know that members support our work. So in these 2 months, our colleagues will work on the proposal so that at the conclusion of the consultation, we'll be able to present a full picture.
One more point, Chairman. Well, the employers group as well as some mommies groups have been talking about this issue. We hope that the government can deal with the problem so that employers can feel rest assured. Mr. Tang Fei, paragraph 19 talks about the CDS. I hope the government can step up regulation of moneylenders. There are controversies surrounding unsecured personal loans. Well, loans can affect young people. There are many advertisements on online social media platforms, and some recruit young people to help recover debts. So I think strengthened regulation is good. We see that the market has become more and more concentrated. Paragraph 19 says that the top 5 money lenders account for 60% of the loan business. Well, there are money lenders of a smaller scale. They think that there should be regulation. However, should sizable companies carry on business of money lending only, SMEs may be phased out soon. They want to know whether the government is leaning towards allowing sizable moneylenders to continue to operate in the market. For those entering into or lending over $100 million to borrowers, well, they can ensure that borrowers have the ability to repay money so that they don't have to resort to unscrupulous practices to recover debt. This may make the market healthier. Well, borrowers do not restrict to foreign domestic helpers or university students. There are people who need cash flow, and there are also people who spend a lot of money because of gambling. So I want to know if it is the government's intention to gradually phase out small and medium-sized money lenders. Thank you. Secretary, absolutely not. Our direction is clear. We just hope that we can tackle the problem of excessive borrowing and at the same time, we want to step up regulation of licensed money lenders. We want to provide more tools to them to tackle the issue of over-borrowing. Excessive borrowing is not just a financial issue. As mentioned by other members, there are wide implications to excessive borrowing. That's why the government needs to intervene, and that's why we're putting forward enhancement measures. It's not that we want to stifle the development of SMEs. Secondly, we know that the existence of the CDS can help settle the problem. It can help settle the problem of information asymmetry. It's been very effective. That's why we encourage all moneylenders to submit reports to the CDS. Also, we have different modules. For example, paragraph 20 of the paper mentions that there is a common module. It provides an effective, low-cost and convenient way for moneylenders to connect to the CDS. This shows that we've been thinking of ways for moneylenders to submit information in an effective and low-cost manner. And at the same time, we want moneylenders to make use of information on the platform. We look at moneylenders that enter into or that lend money at $100 million. This is because we want to make sure that moneylenders can make use of the CDS platform. We are considering the needs of moneylenders of different scales and different needs. Like Dr. Tan Yue-heng said, we have to address excessive borrowing, and at the same time we have to ensure financial inclusion. And in the coming few months, we will work on this. I'm going to draw a line here. Next, Mr. Chen Kin-po. Thank you, Chairman. Money lenders can cause a lot of trouble to the public, so I believe many people are happy to learn about the proposals. The statutory interest rate cap is lowered, and the threshold of extortionate rate is also lowered. They're lowered from 60% to 48% and from 48% to 36% respectively. With the proposal, we will focus more on the ability for borrowers to repay money, and with a lower interest rate, it may be easier for borrowers to repay the loans. Well, has the government thought about this? Now, on whether we should look at the aggregate loan cap or should we set a debt servicing ratio cap, I think we need to talk to the sector. Which proposal will lead to a wider implication? I think at the same time we have to ensure that they can continue to run their businesses. Now, on the proposal concerning loan reveries, well, the residential addresses provided by borrowers may be fake. Even with a signed consent, we don't know whether the signature is real. So I think it's great to have loan referee sign the written consent at the premises where the moneylender carries on the business. If moneylender gets to check the ID card of the loan referee and see the loan referee in person, it would give the moneylender more confidence. Moneylenders want to ensure that the integrity of borrowers. If moneylender fails to meet the loan referee, they might not have the confidence. Also, foreign domestic helpers, some of them, they come to Hong Kong to borrow money. Will you allow employers to learn about the loan contracts so that by the time people go to employers to collect debt, it wouldn't be too late? Secretary. Members asked about the interest rate as at the end of 2023 for moneylenders that have personal unsecured loans entered into. We have about 74,000 cases with young people aged between 18 to 25, and 74% of the cases, the interest rate is as low as 36%, and about 1/5 of the cases involve a interest rate of lower than 25%. So the interest rate cap is set at 48%. However, interest rate involving unsecured personal loans in the market is on the low side. Secondly, we have to consider that if we drastically reduce the interest rate, there might be unnecessary small loans taken out by people. Interest rate is also a cost. If we greatly lower the interest rate cap, it may incentivize people to take out small loans, so we have to strike a balance here. Secondly, I thank Mr. Chen for his comment about loan referees. We will consider whether we should ask the loan referee to sign the written consent in person. Thirdly, between employers and employees, say for example, there is excessive borrowing. How should employers deal with the problem? Employers may inform the Immigration Department of the problem identified. There are different channels in place to deal with such problems. Now it's my turn. From the discussion we have today, we see that a number of members, or most members, support the proposed regulation of licensed money lenders. The consultation is key. We have to strike a balance for different stakeholders. I have one major concern. Under the current mechanism, the licensing court, the company's registry, as well as the police, they are responsible for different matters. In future, will there be a dedicated government department handling all these matters? I want to know about the future direction. In the past, we have seen examples with different agencies taking care of different matters, and then we have one centralized department dealing with the regulatory mechanism. In the long run, will fees be charged on the sector? Will the strengthened regulation increase the operating costs of money lenders? We want to have a greater survival room for money lenders. At the same time, we want to ensure order, to ensure that members of the public can borrow money in a healthy manner. Will the administration tell us about the long-term direction, or will the government maintain the status quo? Thank you. As mentioned in paragraph 29 of the paper, overall speaking, we want to have the company's registry responsible for the regulatory matters. This will ensure consistency in regulation and in the implementation of the new proposals. So moving forward, we will take this direction. For example, on determining applications and on checking compliance of money lenders, we will have the company's registry responsible for that. That's why we have the registrar here today, to listen to members' views. If we all agree on this direction, we will put in place supporting measures to ensure that the company's registry will be able to handle all this work. In the long run, will the government be responsible for the regulation? Or in the longer term, will there be a dedicated department or agency, for example, like the SFC or the Insurance Authority? Will there be a dedicated agency to look after matters concerning money lending? Well, the company's registry deals with matters under the Moneylenders Ordinance. Well, will it be more helpful to have a new dedicated department or agency? What matters is that we can regulate moneylenders effectively. So we want to consolidate resources and functions of different departments and agencies so that the company's registry can play a more effective role.
We'll do a second round. Let's do 2 minutes, Mr. Michael Tin. I will stay within 2 minutes. 3 questions. Some questions from the last round went unanswered. Now, when a debt collection person goes to harass an employer, the moneylender will be held liable as well. So can we include a requirement that when the debt collection behavior is egregious, we suspend the license of the moneylender? Can we do that? Many employers of foreign domestic helpers asked me to put this question to the government. And when a foreign domestic helper has a track record of irresponsible borrowing, can we let the other prospective employers know? And I'm proposing a blacklist for such helpers because those helpers can land the employers in big trouble. And my third point is a ban on lending to helpers in their last 6 months of employment contracts. So can I get a response on these 3 points? Secretary, on Mr. Tin's first question, that has to do with the responsibility or liability of a debt collection agency. The Moneylenders Ordinance also covers the management of debt collection activities. A moneylender will have to renew their license at some point. When the company's registry comes across problems with the moneylenders, the CR can take action. The CR can tell us the actions taken in the past 5 years. Those actions have to do with the issues that came up in the work of the moneylenders. The CR intervened. Now, on the idea of a blacklist, I believe the member referred to a blacklist of foreign domestic helpers. We will have to talk to the Immigration Department about that. That's because the Immigration Department approves and grants visas. Now, on other measures, from what I know, when a foreign domestic helper has debt issues, the employer talks to the Immigration Department. So there are ways to do it. Now, on whether we can bar those helpers with such a track record from entering Hong Kong, that would be a broader issue that would require discussion with the relevant departments. What about the ban on borrowing? The ban on borrowing in the last 6 months of contract. So we have also proposed something in the current framework. So when the helper's employment contract is about to expire, the term of that loan cannot exceed the remaining term of the contract. My proposal is 6 months. Now we can consider the member's suggestion. The company's registrar, the CR, conducted 2,300 inspections. We issued 220 ratification orders and 30 warning letters. On complaints about moneylenders, we received 725 complaints. Among them, 509 complaints were referred to the police force. On illegal debt collection, the police force has taken action. Police officers enforced the law and went after the criminals with offenses related to money laundering. My question is, can you suspend the lender's license under the existing legislation? Now, we can take into account all these factors in our renewal license conditions. That means you do not necessarily suspend the license. You simply have the power to not renew the license. So we thank the administration for taking the questions from members. So based on the paper, the government is consulting the public on this regime on moneylenders. They will collate the views and come up with specific measures and then submit the legislative proposal. A question from members. Any other views from members on this proposal? No? We're all in favor. So once again, we thank the administration for joining us for this discussion. We now come to the next item, item 4, and this is the implementation of the new Capital Investment Entrant Scheme and measures for developing the asset and wealth management industry. And we now invite the government officials to join us. Joining us for this item are Undersecretary for Financial Services and the Treasury, Mr. Joseph Chen, and his team. Also joining us are officials from the Immigration Department and the Invest Hong Kong. We welcome the officials joining us from the FSTB, the Immigration Department, and Invest Hong Kong. Whenever you're ready, Mr. Joseph Chen, please walk us through the paper. Over to you. Thank you. Good morning, members and chairman. Joining me today are officials from the Immigration Department and Invest Hong Kong. We are here to brief members on the implementation of the new Capital Investment Entrant Scheme and also measures for developing the asset and wealth management industry. Hong Kong is now Asia's largest cross-boundary wealth management center. Based on the latest Global Financial Center Index, Hong Kong ranks first in investment management. In recent years, the government has launched various measures to strengthen Hong Kong's status in terms of our financial and wealth management center. We support asset owners who come here for development. We will also provide greater impetus for growth and new business opportunities. Now, to build a larger talent pool and strengthen Hong Kong's role as a wealth management center, on the 1st of March 2024, we launched the new CIES. So asset owners investing 30 million Hong Kong dollars or more can come to Hong Kong. That scheme has been well received since its inception. The scheme is popular among the industry and asset owners. As at the end of June 2025, Invest Hong Kong received more than 1,500 applications. All those applications are projected to bring more than 46 billion Hong Kong dollars investment to Hong Kong. More than 670 applicants have received the formal approval. As at the end of June this year, for those who are assessed to have met the net investment requirement, meaning 712 cases, the total investment amount exceeded $21 billion. Among the top 3 kinds of asset invested, SFC accredited tools, equities, and also debt instruments. As for the remaining 20% or so investment tools, those included insurance-linked securities, open-ended fund companies, real estate investment trusts, real estate, and also the Capital Investment Entrant Scheme investment portfolio. The Hong Kong Investment Corporation has also appointed 4 fund managers for the first batch of the CIES investment portfolio. The first batch is roughly 860 million Hong Kong dollars. Investment portfolio covers areas such as the low-altitude economy, germ technology, smart living, and also technology and culture, and etc. We are grateful to members for the views shared on these matters. Starting from the 1st of March this year, enhancements have been launched. Those measures include relaxing the net asset vetting and also the way we calculate the asset. The window of the net asset calculation was extended from 6 months to 2 years before the application, and the asset will also include the assets jointly owned by the applicant and their family members. And those assets, as long as the asset owner is absolutely beneficially entitled to, can be included. And FIHVs are also included in the asset calculation. The enhancements encourage more investors to take part in the new CIES, along with the tax concessions for single-family offices. Those measures go hand in hand to make Hong Kong more competitive. Starting from the 1st of March this year, meaning the enhancement, we have seen visible increases in the applications. The number of applications have doubled. That means going up from 70 per month to 150 cases per month from last year, and that points to growing confidence among investors in the new scheme. Invest Hong Kong will continue to promote Hong Kong as a talent pool and the place to invest in. On bringing family offices here, Invest Hong Kong's Family Office Hong Kong team helped more than 190 family offices to set up or expand their operation in Hong Kong as at the end of May this year. And then you have roughly 150 family offices that are preparing or have indicated a plan to set up or expand their operation here. So hopefully we will be able to meet the performance indicators set in the 2022 policy address, and that is having no fewer than 200 family offices to set up or expand their operation in Hong Kong between 2022 to 2025, and that points to confidence of ultra high net worth individuals and family offices in Hong Kong. Now, we have also launched other measures, including those on training talent for the wealth and asset management sector. We've also included management professionals in wealth and asset management and professionals in compliance in wealth and asset management under the talent list. Other measures to support the wealth and asset management sector include strengthening or enhancing the mainland Hong Kong mutual recognition funds, and also supporting the listing of alternative assets in Hong Kong, and also allowing the investment of the MPF authority in MPF funds in MPF approved PE funds. We will work out the specific proposals this year. In 2026, we will submit the legislative proposal to LegCo. If that proposal is approved, those measures can take effect in the year of assessment 2025 to 26. On the 23rd of May this year, the government also put in place the company redomiciliation regime, creating a simple and accessible mechanism for a company to come back here. We will step up publicity in the future to attract more mainland businesses and more family offices here, so that Hong Kong becomes a money spinner for those family offices. We welcome questions and comments from members. Thank you. I now open the floor for questions from members. Let's do 4 minutes per member, questions and answers inclusive. Dr. Wendy Hong, Dr. So Chang Wing, Dr. Tan Yue Heng, Mr. Jeffrey Lam, Ms. Carmen Khan, Mr. Edmund Wong, Dr. Kennedy Wong. Dr. Wendy Hong. Last week, a local university issued a study on family offices in Hong Kong. The recommendation was that we should develop multiple family offices. That's because those family offices enjoy greater economies of scale, they can better integrate resources, and they can achieve greater efficiency and serve more high net worth families. If we want to compete with Switzerland and Singapore, then we should be promoting joint family offices. Last year, the government projected roughly 2,700 single-family offices in Hong Kong, but there was no compilation of the stats on joint family offices. The tax concessions for family offices are only for single-family offices. So will we gauge the market sentiment? Will we find out how joint family offices are doing? Will there be tax concessions for joint family offices in Hong Kong? Family offices are now attaching greater importance to the social impact of their investment. So apart from passing on the wealth, social impact is playing a bigger role. Impact investment is now gaining ground across the world. It's a way of investing that achieves a social impact along with other factors. Impact investing is a good combination. To become a hub for family offices, we should be offering different investment options. So will we encourage or strengthen the development of impact investment in Hong Kong as part of a measure to strengthen Hong Kong's role as a hub for family offices?
Undersecretary, 2 questions. Thank you. On the point about joint family offices, I'd like to clarify that there is no unified standard on what is defined as a joint family office. It refers to third parties that offer investment offices or financial offices. That's why we target single family offices when we rolled out the tax concessions. As a third-party service provider, well, we're talking about profit-making services, so we have to have the relevant considerations. However, we are driving the development of joint family offices in Hong Kong. Indeed, our colleagues from Invest Hong Kong have been in talks with the joint family offices in Hong Kong to see how we can facilitate their businesses here. Our bureau has been helping the relevant organizations to expand their development in Hong Kong. I can ask Invest Hong Kong to supplement afterwards. The member is right that family offices have been placing more importance to impact investment, and this helped promote Hong Kong as an ESG financial center. On the talent front, different universities in Hong Kong offer courses concerning impact investment as well as ESG investment. We also have included ESG-related talents into our talent list to attract these talents to come to Hong Kong to pursue development. We have seen growth in ESG investment in Hong Kong as at the end of 2024. SFC-approved funds, we have over 220 of them in Hong Kong. And together they amount to about 1.2 trillion Hong Kong dollars. Over the past 3 years, we've seen this kind of funds doubled, and their size have increased by 1.5 times over the past 3 years through different channels. For example, our academy, as well as the relevant agencies, will help promote the development of family offices. I'll ask Invest Hong Kong to supplement. Invest Hong Kong. I thank the member for the questions. To reinforce Hong Kong as an asset and wealth management center, and to reinforce our status as a hub for family offices, as at the end of May 2025, our team has held over 70 investment promotion activities overseas and on the mainland. They include seminars, talks, as well as outreach activities. We have reached out to over 9,000 participants, and they include family offices. Through outreach activities, we have been stepping up promotion to targeted clients. The purpose is to allow our targeted clients to learn more about our work. In terms of promotion, Invest Hong Kong, together with private banks as well as wealth management teams, for example, the financial sector as well as the securities and insurance sector, we have reached out to different family offices. This is to expand our network. Our efforts seek to nurture a hub with high ultra net worth. And this is also to ensure family offices to have a better understanding of Hong Kong. We have been making use of social media platforms to promote the importance of Hong Kong's economy. In terms of overseas promotion, we have been working with different ETOs. We have been launching activities with family offices as the theme. For example, in June, we took part in a World Family Offices Summit in Switzerland. We also visited different countries and held different investment promotion activities. We have reached out to ultra net worth individuals as well as representatives from the relevant sectors. Thank you. Next, Dr. So Chun-Wing, Deputy Chair. Thank you. I have a couple of questions. The government has spared no efforts in attracting family offices. As at May this year, we have 190 family offices setting up businesses in Hong Kong. And we are very close to the target of 200 family offices set by the Chief Executive in his policy address. According to the information you provided, in terms of the distribution and origins of family offices, well, there is no family office from the Middle East coming to Hong Kong. Well, we have many potential clients as well as wealthy families in the Middle East. Well, indeed, the Chief Executive has been to the Middle East twice, and the government has been spending a lot of effort in promoting Hong Kong and the Middle East. So what are the reasons behind the fact that there is no family office from the Middle East? What kind of targeted measures we can put in place to ensure that we have family offices coming from the Middle East to meet our expectations? Now, we are aware that we need to have a vibrant property market in order to boost consumer spending and to boost the government's revenue. And I see that you have put in place some enhancement measures. Well, how many applicants have purchased properties in Hong Kong under the new CIES? And how will you, based on this ratio, continue to adjust the investment entrance scheme? Now, I see that the new capital investment entrance scheme has been well received, and Invest Hong Kong has been able to attract some 9,000 inquiries. However, in the end, we only have about 1,400 applications. Well, there is a big gap between the number of inquiries received and the applications received. Does the government have any plans to enhance the investment entrance scheme, for example, by lowering some of the thresholds to increase the attractiveness of the scheme in a targeted manner? Undersecretary, on the point about the Middle East, I'd like to clarify this. Invest Hong Kong has been offering help to family offices to expand operations in Hong Kong. There are 10 family offices from the Middle East that have indicated to Invest Hong Kong that they are preparing or they have decided to set up or expand their business in Hong Kong. And we're only talking about family offices that have talked to Invest Hong Kong. There are family offices that have engaged professionals themselves that do not require services from Invest Hong Kong. As far as I understand, there are family offices from the Middle East that have already set up business in Hong Kong. through Invest Hong Kong, there are 10 family offices that have indicated that they are preparing or they have decided to come to Hong Kong. Well, the Secretary did not twist the fact. I'm looking at the information paper you provided. It says that there are no family offices from the Middle East. Understood. Well, I understand that the member may interpret the information provided this way. The information provided refer to family offices that require help from Invest Hong Kong. However, what I want to say is that there are family offices that have engaged professionals themselves and do not require the assistance of Invest Hong Kong. If necessary, we'll provide the relevant information after the meeting. On the new CIES for residential or non-residential properties, well, there are applicants that have procured properties in Hong Kong. From having the applications approved and actually coming to Hong Kong, it takes time for applicants to make investments in Hong Kong. We will look at the net asset as well as the investment made by applicants to review our scheme. Well, the scheme has been very well received. It's been just a year since the launch of the new CIES. As mentioned in my opening remarks, we have already received over 1,500 applications over just about a year's time. Compared to 20 years ago when we first launched a similar scheme, well, this new scheme is very well received. Of course, we will continue to review the scheme based on market's feedback, and we will conduct a review accordingly. Can you provide statistics in relation to properties purchased? For non-residential properties as well as residential properties, well, applicants have been purchasing these properties and they account for less than 1% of the total investment made by applicants under the scheme. Dr. Tan Yueheng. The new Capital Investment Entrant Scheme is very well received. We're seeing a very good development trend. I'm concerned about the relationship between the INT development in Hong Kong as well as the immigrants attracted under the entrance scheme. 30% of the $3 million have to be put into the investment portfolio. We have already given formal approval to 630 applications. So that means some $2 billion can be invested in INT. However, only $860 million are placed under the Hong Kong Investment Corporation Limited. What are the reasons behind? Is it because there isn't enough capital? That's my first question. Secondly, applicants may invest in equities, debt securities, or properties, or INT. The implications for these investments are different. You do not need to come to Hong Kong to invest in equities. You can do that through the Stock Connect scheme. Immigrants should invest in INT, and that would be more meaningful and helpful, and that's different from investing in equities. For example, there are people with $50 million of assets. Some of them, they only have $30 million. For those with huge net assets, do they also have to wait for 7 years to get the Hong Kong ID card? Can we give them preferential treatment? For example, those investing in INT, can they be given priority to get the permanent residency? Also, with the stable coin ordinance as well as the Digital Asset 2.0 blueprint. Well, can we introduce digital asset into one of the investment portfolio? We can have ETF or different types of bonds under the investment portfolio so that we can promote the development of digital asset in Hong Kong. Thank you.
Thank you. First, on the management of the investment portfolio by the HKIC. Under the new scheme, each applicant needs to invest 10% of their $30 million in the investment portfolio. Now, if the HKIC has appointed 4 fund managers for the first batch of portfolio, the first batch is allocated involves an amount $860 million, and their sum will be distributed evenly among the 4 fund managers. This portfolio will have to do with areas important to Hong Kong's INT development. We start with $860 million for a reason. The portfolio is just like your venture capital or private equity. So they take a phased approach. They find the right project in a phased approach. There will be the second batch and the third batch. So that's the approach of the HKIC. Now, on the 7-year requirement for obtaining permanent residency in Hong Kong, the new CIES is for investors to come here and live here. To become a permanent resident, a person will have to be ordinarily resident here for 7 years. That is a matter of the basic law. Maybe my colleague from the immigration department can tell us more in a moment. The member suggested making the investment scheme more attractive. Maybe some kind of preferential treatment under the scheme. We note the member's suggestion. We will consider the suggestion. Now, on digital assets, the member is right. Digital assets are not a form of eligible investment under the current CIES. But if it is an SFC-approved fund, and that fund also happens to be a digital asset, that's fine. Now, on adjusting the eligible investment options, we note the members' comment on this point. We will gather feedback from the market, and we will further consider those points in the future. Now, I give the floor to my colleague from the Immigration Department about an earlier point. The Undersecretary is right. The 7-year requirement is a requirement from the basic law. This applies not just to the CIES, but also applies to the Top Talent Pass scheme, the QMAS scheme, or Quality Migrant Admission scheme. All those schemes come with a 7-year requirement for permanent residency. If members have no objection, I want to let Dr. Kennedy Wong go first because he has another meeting lining up. Maybe we can let Mr. Jeffrey Lam go first, and if members don't mind, we will let Dr. Kennedy Wong ask his questions first. So we all agreed on this, so we'll come to Mr. Jeffrey Lam and then Dr. Kennedy Wong. Mr. Jeffrey Lam. The government has relaxed the requirement about net asset assessment, and then the monthly applications went up from 70 to 150. So that points to the impact of flexibility on demand. Investment in real estate makes up a small percentage of overall investment, just 0.17%, and all those investments went into non-residential properties. That is different from what I have heard. And that also shows the design of the scheme is out of step with the times. Has the government looked into why we see such a small investment? Some applicants under the scheme have told me this $50 million threshold is too high. And then you also have a cap on real estate on $10 million, being $10 million, and no mortgage is allowed. Other places allow the full value of their real estate or residential investment to be counted towards the scheme. The government mentioned a review, but our review is not as flexible as elsewhere. And that in effect penalizes people who want to buy properties in Hong Kong. So I wonder how we can strengthen the flexibility. So let's start with residential properties. Will the government consider lowering the threshold about residential properties? Can we lower the threshold from $50 million to $20 million? Or can we simply do away with the threshold? Invest Hong Kong has done much to bring in people who take an interest in Hong Kong. But companies have told me that when they make a request, the government responds slowly and inflexibly. So I hope the government can accede to the requests of the applicants. That's how you can truly bring more people and companies to Hong Kong. Undersecretary. I thank the member for his comments. LegCo shared many thoughts with us, so we adjusted our scheme earlier, and that adjustment has paid off. So once again, I thank members for their ideas. On real estate, as I said in my reply to another member, for non-residential and residential real properties, investment in such areas made up less than 1% of the total investment volume. Now we have relaxed the requirements about real estate, and that adjustment happened only a few months ago. We want to give it more time to gather more data. I want to make 2 points. Any change about residential properties will affect people's lives, so we have to take into account all factors before deciding on any change. The scheme is doing its work, and we remain open to views. We will pay attention to the views from members and the market, and then we will consider the factors. Chairman, the Undersecretary mentioned people's lives. Look at our residential and non-residential properties in Hong Kong. Property prices are falling across the board every day. Any further fall means there will be many cases of negative equities. And I don't think the Undersecretary is helping people with what he said. More cases of negative equities will affect Hong Kong as a whole. We hear about possible impact on Hong Kong, but what about Hong Kong's overall interest? Property owners don't want to see their property prices fall. We don't want to see people taking their own lives out of desperation because their property prices plunge. So let's not wait too long before we do the review. Thank you, Chairman. Next, Dr. Kennedy Wong. I thank the Chairman and Ms. Carmen Khan for allowing me to cut in. I start by congratulating the government. The new CIES is going from strength to strength. I'm looking at the figures and I'm seeing positive feedback from the market. To go further with the scheme, can we achieve synergy between the new CIES and other schemes and other departments? Under the Financial Secretary, there's a department called OASIS, Office for Attracting Strategic Enterprises. OASIS has also done much work. Overseas and mainland enterprises may be looking to invest huge sums in Hong Kong. Those companies are listed companies. Those companies also come with many shareholders. And when they come to Hong Kong, there are people taking the management responsibilities. Can we give local residency to those people responsible for running those companies. I know there are large investment funds from Africa. Those businesses are expanding their presence here. They're renting large office space. They're hiring more people. They're managing more than $2 billion US here. But as I talk to the senior management of those funds, they struggle to acquire residency here. Now, if they come here under the QMA scheme, Quality Migrant Admission Scheme, the waiting time is long, and they will be required to provide tons of information. And then the Top Talent Pass scheme is not for them. Those senior management people are in their 50s. Now, under the limited partnership funds, which is a model adopted by family offices, and when the asset under management reaches a certain scale, can we grant residency to those people tasked with running those funds? Undersecretary. I thank the member for his questions and comments. Invest Hong Kong works closely with Oasis on promoting our admission schemes and also promoting family offices. I also thank the member for sharing his observations from his outreach to the industry. We have to approach each case based on its fact. One scheme works better for one case, but maybe something else works better for another. So we're happy to talk to the member after the meeting so that our colleagues can find out more about the case specifics, and then maybe we can refer those people to a certain admission scheme that will work best for them as a way for them to get Hong Kong residency. I need to extend the meeting by 15 minutes. So we will go through the members who have pressed the button to speak, and then we will draw the line. Ms. Carmen Khan. Thank you, Chairman. I can see the Bureau and Invest Hong Kong are willing to hear from all sides. The government has taken a flexible position on the asset requirement. So I can see the government has noted the view on the need for flexibility. We have to be agile with the scheme. The CIES was launched in circumstances vastly different from where we are now. Things are constantly changing, meaning they are dynamic. So we should be thinking about adjusting the scheme about the value of the properties. Now the threshold is at $50 million. Now, for those investing $30 million, 10% of that investment will have to go into the CIES investment portfolio. Now, we can adjust more than one component under the new CIES in light of the changes in property prices. We want people to invest more in Hong Kong. Now, people now invest a minimum of $3 million in the portfolio. Now, I'm looking at paragraph 6. It's only at $860 million. The total investment has exceeded $20 billion from applicants. So are we saying that those applicants are investing more than $30 million per applicant? Otherwise, you should see $2 billion for the HEIC. You shouldn't be having just $860 million for 4 fund managers. You have 4 fund managers after all. And you won't see much return based on the small figure. So I would like an explanation on this discrepancy. Now, on the other enhancements under the proposal, I'm looking at paragraph 15, mutual recognition of funds with the mainland. The SFC is doing a fine job. I commend the SFC's work. We're drawing 40 million RMB, and then by 2020, at the end of, and then we will see. Actually, we saw 129 billion RMB as at the end of April this year. I talked to private banking people this year because much of those investment under the CIES went through the private banking. Now I'm looking at paragraph 17, tax concessions. It's about the carried interests. So tax concessions for coupons on bonds. I wonder if we can go further with the tax concessions for the returns through the coupon on bonds. Now, on redomiciliation, paragraph 18, it's a major development. When more companies are redomiciled to Hong Kong, that will mean more investment options for people in Hong Kong. Mainland companies can also go for redomiciliation here. And there are also many intermediary companies in the group. Can we waive the stamp duty for those intermediate companies? Can you allow time for the government to give a reply? So we have to continuously enhance our schemes. I wonder if the government is open to such ideas.
Undersecretary, I thank the member for the valuable comments. On investment in real estate, as mentioned, like the member said, we will continue to review the scheme and listen to feedback from the market. We will continue to review and enhance the scheme. The member asked about the investment portfolio. The first batch of capital allocation is $860 million. And it counts for 10% of the investment portfolio as at the 30th of June. We have over $21 billion of investment made by those eligible, and 2.1 billion Hong Kong dollars will be placed into the investment portfolio. That means $2 billion will go to the investment portfolio. It's just that $860 million have been allocated. The HKIC, where there are appropriate investment portfolio, they will allocate the second and third batch of capital. We will consider members' views. In terms of tax concessions, we are working on the relevant policies. We will expand the scope of fund under the tax exemption regime. We will increase the types of qualifying transactions eligible for tax concessions for funds and single-family offices. Also, we will enhance the tax concession arrangement on the distribution of carried interest by private equity funds. We've been in talks with the relevant sectors. Last month, we had meetings with them to listen to their views. We hope that within this year, we'll be able to finalize the proposal and it could be approved by LegCo next year. We hope that the relevant measures will take effect from the year of assessment 2025-26. Next, Mr. Edmund Wong. Thank you. I'd like to commend the government's efforts in attracting capital and talents. Last year, we went back to top 10 of the World Talent ranking as at the 15th of June. This year, Invest Hong Kong has received 1,441 applications. It has approved 1,366 applications for net asset assessment and 670 applications for assessment on investment requirements. The Immigration Department granted approval in principle for 1,100 applications, enabling, and it has also granted formal approval for 630 applications. What is the shortest time needed for granting an application? This can be an important indicator for the relevant government departments and bureaus. Also, Ms. Carmen Khan just now mentioned about investments in real estate. When applicants come to Hong Kong, how many investments are made in talents, in industrial buildings, as well as in residential properties? Under the new CIES, 10% out of the $15 million worth of property investment can be counted towards the scheme. And so in total, they'll have to make $70 million of investment. That's on the high side. We have to look at the investments made by eligible applicants in order to adjust the scheme. Now, on family offices, At this council, I've talked to the secretary as well as the undersecretary a couple of times so that the restrictions on family offices could be relaxed. A few weeks ago, at the council meeting, undersecretary mentioned that it's hard for the government to roll out tax concessions for joint family offices. But I want to stress that we want to roll out tax concessions to end users of joint families offices instead of the operators. We've attracted many ultra high net worth individuals to Hong Kong. Moving forward, we may not be able to attract the same number of high net worth individuals. However, can we roll out tax concessions to attract family offices, even of a smaller scale? Understand it's hard for us to draw a line here, but while we strive to draw for capital, can we relax the relevant barriers and restrictions so that we can attract more ultra-high network individuals in Hong Kong? I hope that there could be more tax concessions for family offices so that we can strengthen our status as a hub for asset and wealth management. Undersecretary, I thank the member for the suggestions. On the average time required for approving applications, I'll ask Invest Hong Kong as well as the Immigration Department to tell you more. The second question concerns investments in real estate. I'd like to make 2 points. In total, non-residential properties and residential properties investment account for less than 1% of the total investments made. We have relaxed the scheme twice in just a few months' time. It takes time for applicants to identify the right property and make the investment, so we will continue to monitor the situation. Now, on the investment amount, we set the threshold at $15 million, and $10 million will be counted towards the scheme. Applicants can apply for mortgage. So, applicants may not necessarily have to take out $50 million from their own pockets. As said, we will continue to monitor the situation and will conduct a review. Now, on the point about family offices, for operators, they operate in a profit-making basis. So we have reservations in terms of rolling out tax concessions. As to whether we can come up with a definition for joint family offices, we'll keep in close communication with the relevant sector to see how we can drive the relevant development. Now I'll pass the floor to Invest Hong Kong as well as the Immigration Department to tell you about the time required to approve applications. Depending on the types of assets held by applicants as well as the documents submitted, the time required for approving applications varies. On net asset requirement approval, if documents submitted are ready, normally it takes 3 weeks to approve the relevant applications. For simpler applications, it takes less than 3 weeks. I'll ask the Immigration Department to tell you about visa applications. On visa applications, there are mainly 2 types. We give approval in principle, and that kind of applications takes 3 weeks. After investments are completed, we only need 1 week to grant the formal approval. Lastly, I'd like to express some comments. I also have a couple of questions. The administration has done a lot of work to implement the new CIES. One of the concerns is about the investment portfolio. I believe some potential investors would like to learn more about how their money is invested. I understand that the administration has appointed 4 fund managers. and investments will be made in low-altitude economy, germ technology, as well as smart living. Not to mention about investing $30 million. Even if you invest in an equity, there could be a detailed report generated. There are different types of equities, bonds, as well as debt, securities, and funds. However, there is a lack of transparent information provided by the Hong Kong Investment Corporation Limited. How can you ensure that eligible applicants can invest their money confidently? Also, members are concerned whether there is room to further enhance the new CIES. For example, can the $50 million threshold on real estate property be lowered? Could there be also more investment products covered under the scheme? There could be digital asset or ETF funds or even gold. You may want to allow investors to invest in a greater variety of products, which may not necessarily have to do with digital asset, but there could be a greater variety. Undersecretary, on the investment portfolio, the first batch of capital was allocated in Q2 this year. The HKIC has appointed an administrative agency, and this agency will work with fund managers to compile financial reports for investors, and the report covers information about the performance of different funds, as well as the cash flow and liquidity. While the capital was just allocated in Q2 this year, the relevant reports will be published later. Also, as mentioned, we have been collecting views from different parties. The last round of enhancement measures were only rolled out a few months ago. We have listened to members' views. Members want greater flexibility under the scheme and a greater variety of investment types and products. We will consolidate the views and we will consider these views. We're wrapping up this item. I thank the administration for attending this part of the meeting. Agenda item 5, any other business? There being no further business, meeting adjourned. Thank you.